JpMorgan Chase analysts have revealed that a select group of 30 artificial intelligence-linked stocks generated approximately $5 trillion in wealth gains for U.S. households over the past year, fundamentally reshaping American consumer spending patterns and economic dynamics. The bank's latest research, published this week by economists Abil Reinhart and Michael Feroli, found that these AI companies now represent about 44% of the S&P 500's total value, translating into an estimated $180 billion boost to annual consumer spending, equivalent to 0.9% of total consumption. JP Morgan estimates 30 AI stocks have made Americans $5 trillion. AI's trillion-dollar touch. JP Morgan analysts link $5 trillion wealth surge to leading AI stocks. AI's economic dominance transforms markets. The wealth surge stems from unprecedented gains in technology giants including NVIDIA, Microsoft, Apple, Amazon, Alphabet, and Meta platforms. Nearly half of the identified companies operate in semiconductor and hardware sectors, with the remainder spanning software, cloud services, consulting, automotive robotics, and data center operations. JP Morgan utilized proprietary technology to identify these companies by analyzing the frequency of AI co-mentions across news articles and earnings call transcripts. The methodology reveals AI's pervasive influence across traditional market sectors, with Digital Reality Trust representing the sole data center company on the list. The economic impact extends beyond individual portfolios. JP Morgan research indicates that AI-related capital expenditures contributed 1.1% to U.S. GDP growth in the first half of 2025, with AI stocks responsible for 80% of earnings growth and 90% of capital spending growth since November 2022. Concentration risks and bubble concerns. Despite the massive wealth creation, analysts warn of significant vulnerability. According to Reinhart and Feroli's calculations, a 10% decline in AI stock values would eliminate $2.7 trillion in household wealth and reduce consumption by approximately $95 billion. JP Morgan CEO Jamie Dimon has expressed caution about current market conditions, telling Fortune this week that while AI itself is real, some asset prices appear to be in some form of bubble territory. A recent Bank of America survey found that 54% of global fund managers believe AI stocks are in a bubble. The concentration of gains among so few companies has drawn comparisons to previous market bubbles. By October 2025, nearly 50% of the S&P 500's $57 trillion market value is linked to AI-exposed sectors, including cloud computing, semiconductors, and software monetization. This represents the highest market concentration in decades, with some experts warning of potential systemic risks if the AI rally reverses. Despite these concerns, current market conditions show no immediate signs of correction, with multiple technology leaders reporting strong third-quarter earnings driven by AI investments. The wealth effect continues to support consumer spending patterns, particularly among affluent households who hold the majority of stock market investments.